and welcome. This is the earnings special on Bloomberg Quint. We are taking stock of the quarter gone by for Newgen Software. And as far as the quarter is concerned, we've seen a steady growth as far as revenues go at 26% year on year. And there are plenty of other variables which are also working in favor of the company. To take us through the quarter as well as the outlook, I'm in conversation with the CMD of the company, Mr. Nigam. Mr. Nigam, thanks for joining us and taking the time out. Let me begin by asking you about the top line growth and how you're seeing it pan out as to what is it that's driven growth in this quarter and what can we expect for the quarters to come.
See, we continue to be on track in delivering on all our key business matrices. So we have been growing. We have seen a revenue growth of about 32% for this quarter. Our U.S. revenue has grown by 78%. APAC has grown by 158%. So I think we are being able to get new clients. We have got 12 new customers this year. We have got ticket size of deals is going up. We have got a license agreement deal with 2 large companies of 5 crore plus. Interestingly, our cloud revenue is also witnessing 79% growth. So I think we are on track to deliver the typical growth of 22-23% year after year, and that's the CAGR which we are delivering.
Sure.
And so, also, I think,
Yeah, please go on, sir. Yes.
And also, I think we have keep our expenses on track. We will be able to deliver this year. This quarter, the margins have been very, very good, and I think we will continue to do that.
Okay.
So I think this is the
right. So I also want to understand from what I gather from notes in the earnings call, you've signed about 12 deals this time in the third quarter in comparison to like about 22 odd deals in the second quarter, and the first quarter again 17 deals. That means that you do have a robust pipeline in order. My question really is then that how are you seeing the size of these deal wins through these years? Do you think that there has been a gradual uptick in the size as well, and what else can you tell us?
Absolutely. This as we are saying that this quarter we have signed up more than 5 crore deal, at least 5 of them. So I think the value is going up. Uptick is there. Partly in India also we are getting large accounts, and also in US we are getting very, very large accounts. So I think we see a growth in the large accounts. Also, the second thing is the SaaS revenue is absolutely growing, and which is wonderful for us because they are long-term revenues.
Sure. So as far as our estimates are concerned, your EBITDA margins, while there was steadiness there, they were slightly below our expectations. And I believe to a certain extent this is because of certain higher provisions. Can you tell us a little more about factors that determine margins at this point?
See, I think we will, by the end of the fourth quarter, we will deliver exactly where we have intended to. We are following the Ind AS, and because of Ind AS, there is a ECL automatic calculation of creating more these things, and that is why it is slightly higher. But overall, I think we know that by the year end, we'll be able to recover back to that.
Okay.
And otherwise, if you see, the growth has been 133%.
Right. All right. So, and just a final question, perhaps, and it is on your debtor days, which again has been on a gradual decline, if I can call it that, if there is a trend at all. Can you tell us a little more about this particular area?
See, about 4 quarters back when we started, it used to be 180 days and so on. Now it is coming down to 156 days, and overall on a revenue on trailing 12 months, it is 132 days. So we are still committed. I think last quarter also I said that we are committed to this, and by June quarter, we will be able to bring it down to absolute normal of 120 days, which is the industry norm in product companies.
Okay, fair enough, Mr. Nigam. We leave it at that. Thank you so much for joining us and taking us through the outlook for the company. Thank you.
Thank you.